For more than a decade, anyone watching Bitcoin has seen it move to a certain beat. You know, a wild, super volatile, but surprisingly predictable 4-year cycle of boom and bust. But what if that beat, the one we've all learned to count on, is about to change? What if the whole rhythm is about to break? Well, that's exactly the question we're diving into today. See, this rhythm is all tied to a built-in event called the halving, where the new supply of Bitcoin gets programmatically chopped in half. And after every single one in 2012, 2016, and 2020, Bitcoin's price went on an absolutely insane run. We're talking thousands of percent in gains. But what always followed was a brutal crash, wiping out anywhere from 70 to 85% of its value. It's been the defining pattern of Bitcoin's entire life. And this is where it gets really interesting. A new theory is floating around that suggests the old rules, they just might not apply anymore. That Bitcoin could be stepping into a completely new phase of its life. And that new phase has a name, a pretty big name, the supercycle. It's this really compelling idea that we're moving beyond that simple 4-year pattern into something, well, something much, much bigger. So what in the world is a supercycle? Well, according to the theory, it's the moment Bitcoin stops being just a speculative trade and enters a long-term structural bull market. And the key here is that this isn't driven by short-term hype anymore. No, this is supposed to be driven by fundamental, high-level adoption from some of the biggest players in the entire financial world. This slide lays out the difference perfectly. On the left, you've got the old world, that familiar and frankly terrifying roller coaster of a massive price spike followed by a just devastating crash. But on the right, you have the supercycle theory. It's proposing something totally different. A steadier climb, fueled by real structural adoption with much smaller, healthier corrections and consistently higher price floors along the way. Okay, so what's the actual evidence for this massive shift? What makes anyone think that this time could actually be different? Let's open up the case file and really look at the arguments. So, the very first piece of evidence is just pure, cold, hard math. We're talking about a supply shock. There will only ever be 21 million Bitcoin, period, end of story. And we're already over 19.5 million of the way there, which leaves less than 1.5 million left to be created over the next 100 years. The supply is getting incredibly tight. And this chart just hammers that point home. Bitcoin's annual inflation rate, the rate at which new coins were created, has now dropped below 1%. That makes it programmatically scarcer than gold. And when you put that up against traditional currencies, which, as we know, can be printed into oblivion, you start to see why people are calling this one of the hardest monetary assets on the planet. So, this is the crucial point. Who is actually buying this incredibly scarce asset? The players in the game have completely changed. I mean, the 2017 cycle, that was driven by retail investors, people like you and me, treating Bitcoin as this kind of cool, speculative internet experiment. But today, it's the institutions. We're talking corporations, giant asset managers, and even pension funds, and they're treating it as a legitimate macro asset. That brings in way bigger and way more stable capital. And this whole shift is happening against a very specific global backdrop. You've got over $300 trillion in global debt, massive currency printing happening everywhere, and just this general decline in trust for traditional financial systems. All of that creates a powerful tailwind, a perfect storm, really, for an asset that isn't controlled by any government. But all right, let's pump the brakes a little. It's not that simple. For every compelling argument for a supercycle, there's a pretty healthy dose of skepticism. So let's flip the coin and look at the other side. Skeptics are quick to point out that no asset is an island. Bitcoin still lives and breathes in the global financial system, which runs on these big cycles of easy and tight money. You know, when interest rates go up and money gets tight, risk assets, and yes, that includes Bitcoin, they tend to fall. Plus, the crypto market is still packed with leverage, and leverage always leads to volatility. And that really brings us to the core of the entire debate, and it's summed up perfectly in this one question. Has the new structural demand from institutions and global adopters gotten so strong that it can actually overpower the inevitable downturns in the market's liquidity cycle? That right there, that is the multi-trillion-dollar question. So instead of just debating the theory back and forth, what would actually prove a supercycle is happening? What are the signals we should be watching for out in the real world? Well, here's a checklist of 5 key things. All right, here are the 5 big signs. First, and this is the most important one, No more 80% crash. The next major drawdown has to be significantly smaller. Second, the corrections we do get are limited to a much healthier 20 to 40% range. Third, a nation-state or even a central bank officially adds Bitcoin to its balance sheet. Fourth, the money keeps flowing into those new ETFs, even when the market is down. That shows real long-term conviction. And finally, number 5, Bitcoin decouples from risky tech stocks and starts carving out its own path. Because here's the thing, whether you want to call it a supercycle or not, one thing is absolutely undeniable: Bitcoin has fundamentally evolved. I mean, it has traveled an incredible distance, from this niche little experiment for cryptographers to a recognized trillion-dollar global macro asset with institutional-grade plumbing.
So maybe the final question isn't just about price cycles at all. Maybe what we're really asking is this: are we simply witnessing the slow, messy, volatile, but maybe inevitable process of a brand new global asset being monetized right before our very eyes? Now, there's a thought to leave you with.
Now, it's important to mention that the framework and all the analysis we've explored here today is based on research that was published by Bitcoin Platinum University. And finally, just for full context, the source material also notes that the same organization has recently launched its own native cryptocurrency, BPD, as part of their broader vision for a decentralized financial ecosystem.